Hello, and thank you for joining us at XM.com. This is the Weekly Outlook. I'm Cristina Marujas, and joining me today is Senior Investment Analyst Rapi Boyajian, and we'll be having a look at this extremely important week ahead with a lot of data releases to give us a sense of how badly the virus is impacting the global economy. But before we get into the data, let's start by having a look at the RBNZ. It's meeting on Wednesday, and it seems that its recently launched QE program will be the focal point of this meeting. Now, do you think the RBNZ might announce any significant changes to the QE program? And how do you think the Kiwi will move?
Well, there's a very good chance that the RBNZ will increase the size of its QE program. Their initial target was to purchase 30 billion New Zealand dollars of New Zealand government bonds. Now, RBNZ has been pretty active in the bond markets, and they will probably reach that target very soon. So if they want to continue participating in purchasing government bonds, they will probably have to increase the size of that target, possibly to 50 or 60 billion New Zealand dollars. But the other thing that markets will be paying attention to is any signs of negative interest rates. Now, there's been a lot of speculation whether or not the RBNZ will adopt negative interest rates, although officially they've said that that is not on the cards. Several remarks by RBNZ Governor Adrian Orr suggest otherwise. So any signs at the meeting that negative rates is something being considered, that is likely to weigh on the New Zealand dollar.
Now, moving into Australia, we're expecting its jobs report for April. Data out of the country in March, though, was surprisingly positive. Is it possible for this trend to carry on in the jobs report on Thursday?
Well, it's highly unlikely we're going to see that trend continue into April. There were actually one-off factors that did boost the March data, specifically for the March retail sales and the jobs numbers. As far as the employment numbers were concerned, the survey was carried out in the first half of the month, so that was before the country went into lockdown. Now it's almost certain that given that Australia has been in lockdown throughout April, we will see huge job losses. Forecasts are for at least 500,000 jobs being lost during the month, and that may prove a reality check for the Aussie, which has been doing rather well lately on optimism that the relaxation in the lockdowns in both Australia and its biggest trading partner in China will translate to a quick recovery. So we may see the Aussie feeling some heat this week from the jobs numbers.
Turning now to the UK, it's reporting GDP for Q1 on Wednesday. Investors are, of course, bracing themselves for rather weak numbers. What is forecast for the data, though, and how could the GDP affect the pound?
Well, forecasts are for a big drop in GDP. They currently stand at 2% quarterly drop. So that's more or less what we've seen in the Eurozone and the US. But the other thing investors will want to see is how soon the UK comes out of lockdown, because the UK has been somewhat more resilient in terms of easing its lockdown measures. And we're going to have an announcement by Prime Minister Boris Johnson over the weekend where he will lay out a roadmap for the UK to come out of its lockdown. So that may potentially boost the pound early in the week. Later on, though, the GDP numbers will probably increase negative pressures on sterling, especially after the Bank of England at its policy meeting hinted at more stimulus should the economy require it.
And finally, let's have a look at the U.S. as well. We're already seeing astonishingly high jobless numbers. This coming week will also be very important with a lot of data coming up. Inflation numbers on Tuesday and retail sales and industrial production on Friday. Now, it's expected that these numbers will be weak. The question is, how bad can they be, and how will the dollar perform?
Well, as if the March numbers couldn't get any worse, they probably will. So in April, because pretty much the entire country was in lockdown, it's only natural that the numbers will be pretty bad. So retail sales are forecast to have tumbled 10% over the month, industrial production falling by about 11% over the month. So these are pretty dire numbers. But of course, we are potentially at a turning point since many of the lockdown measures are being eased across the world, including the United States. And as far as the US dollar is concerned, it has been behaving as a safe haven throughout this crisis. So even if we do get worse than expected figures out of the US, they could potentially boost the dollar rather than weaken it, because any increase in overall risk aversion in the markets will be positive for the greenback.
Rafi, thank you for joining me today, and thank you for watching the Weekly Outlook here at XM.com.